Last video we talked about equilibrium and how it can improve your trading massively. In this video I will show you my optimal trade entry, what it is, how to use it, where to find it, and how I optimize my risk reward drastically by using this. Let's get into the video. Okay guys, so last video we used our GAN box. This is what we use for equilibrium levels and how to find equilibrium points, how to find premium and discounts. This video we are going to talk about the Fibonacci retracement. So as you can see, we also have that 50% level right here, but I have two more lines on here. So I have the 61.8 and I have the 70.5. I have colored them in gold. If you want my exact settings, you can use them right here. So what do I use this Fibonacci retracement for exactly? Where do I use it? How do I use it? And how do I improve my trades with it? So again, as the same with the equilibrium. So what is the Fib retracement? Fib retracement is basically just a tool that we use in order to find very good entry points based on a mathematical formula, the Fibonacci. So let's say we have a chart like this and we have our Fib from the top to the bottom. Basically, we're only entering when price comes in that 61.8 area. So again, actually in an upward trend, it's bottom to top, I'm sorry, right here. And now I drew it like we're always one pip shy from that. It's no worries. Bottom to top, and basically the most important thing to notice right here is that we are entering only after 61.8 has been hit. So let's use this in a live example in the charts. And the same with equilibrium, guys. This can only be used in a trending market. So only in an uptrending market or only in a downtrending market, we cannot use this in consolidation phases, okay? So right here, for example, we are on the 4 hour. And as you can see, the 4 hour is in a very good uptrend. So let me go back with the replay mode tool to show this a bit better. So let's go to here. And let's say I only saw a price like this. How can I know at this point in time that we're in an uptrend? Okay, first things first, we took out liquidity right here. Secondly, we broke our previous high right here. That created a change of character for us on the 4 hour. So then let's go to the 1 hour. And on the 1 hour is the place where we already can use our Fibonacci retracement tool. So like I said in the previous video with the equilibrium, you want to use the lowest point that broke the previous high. So in this example right here, this is the lowest point that broke the previous high. That was right here. And this is your highest point. How do you use your highest point? Your highest point is the point that is the highest before a pullback has been created. So right here, in this case right now, we're only going to look for entries inside of this box right here. Right? And as you can see, you had an entry right away. So right here, the box has been ticked and this could have been your entry. Now you have two ways of approaching this. You can enter as soon as we are getting to the 61.8, you put a limit order right there and you just enter. You put your stops underneath the 70 or a bit lower underneath previous structure, and that is your trade. Or you can wait, like I like to do it, for displacement coming out of that zone. So then you go down to the 15 or to the 5. Let's do it for this example on the 5. And as you can see, we have displacement coming out of the zone. This indicates to me that this zone is valid and that this is the right zone to look for. By the way, you can do this on every time frame. I just like the 5 minutes so that I don't have to stress too much. So then you can take it on the 50% of your fair value gap, on the top of your fair value gap, on the bottom of the fair value gap. It is basically whatever you like. Normally I always take it at the top of the fair value gap, unless it is quite a large fair value gap, then I take it in the middle. So I would say in this example, I take it in the middle right here. We put our stops underneath the previous low. So it is something like this. And we just target a 1/2. So it is something like this right here. And as you can see, of course, target would have been hit in this example. So then we are waiting and waiting, or trade, hit, take profit. But in this example, like also discussed in previous video, we don't break the previous high with this impulse. So I would say on the short term, we are looking for bearish trades. So let's go to the 5 minutes, and this is overnight. So there's really no point in me doing this, I would say, since I'm not trading agent session anyway. But let's say we do this from high to low. You want price to see come inside of the zone, give a reaction of it. So this is your reaction right here. Then we have our fair value gap, in this case right here. Stops above the high. You target a 1/2 like this. and this was trade number 2. So then we are waiting. We're still bearish bias. So we are waiting. We are in this zone again. So preferably we can see a reaction happening again, since on the 1 hour we will like that to happen. So on the 5 minutes, let's go to the 15 and let's go to London Open actually, since there's no point in us trading this. London Open starts at 9 AM for me, guys. So let's say from 8 right here, we are looking for trades again. So as you can see, we came out of this 1 hour optimal trade entry. So then we were waiting, of course, because we were not in our time frame yet to trade. And if you're trading agent session, you can always take this, of course. If you would do this, then take it from the low to the high, would have not have been hit. Then go to the next point, because your previous high has been broken. Low to high, but this is not really a pullback. So let's just do this one. Maybe on the 5 minute it is a pullback. Yeah, on the 5 minute we can say it is a pullback, so let's do it like this. Bam, we have not hit our optimal trade entry. Then let's go further. Low to high. Optimal trade entry has been hit. We have a reaction off here. Let's see if we are creating a fair value gap or not. We are. So let's use this as our entry. Entry right here. Stops underneath the lows. We are targeting a 1 over 2. Or you can target these fib extensions, guys. There's also a really nice thing to do, to target the fib extensions. So let's just target the -1, -2 right here. Okay, let's see if we are getting tapped in or not. Okay, we're not getting tapped in and our new high has been formed. So we are reshifting our Fibonacci low to high right here. Our entry stays somewhat the same. So let's wait for a reaction. We didn't come down. So we are now waiting for a new high to be formed, since this is our new low, as the previous high has been broken. Right here we have our pullback. So let's take our fib from the low to the high. And let's wait for price to come inside of our optimal trade entry. It does not come on our optimal trade entry, it does come underneath equilibrium. So now again, let's wait for the high to be formed. That is right here. So let's take our low to our high. We are now inside of the OTE. We want to see displacement out of here with a fair value gap. Did we get one? And again, guys, be my guest to go into lower time frames, because there most probably you will get those trades. You will get those fair value gaps a lot quicker. For example, you had a fair value gaps right here, did not get tapped. You had fair value gap right here. You could have had a very nice entry right here. Fair value gaps right here. So fair value gaps all over the place, right? But in our case, the only fair value gap that is formed is right here. And I would like it to be formed as close as possible to the OT. So we're just going to ignore it. But you can take it, of course. Okay, guys, right now, as you can see, we broke the lows right here. So what does this tell us? Break of structure. Or actually it happens right here already. So you have your market structure shift right here on the 15. Let's see, is the 1 hour and the 4 hour still bullish? The 4 hour is still bullish. The 1 hour is still bullish. So what does this tell us? This is most probably just a pullback. So why do we want the pullback to be happening? You go to that 1 hour, that is still bullish. And this is your optimal trade entry right here. So right now, two things that you can do. You can trade it downwards. But since it's overnight, we're just going to leave it alone. And we're going to wait for it to hit our optimal trade entry right there. As you can see, it did not hit the optimal trade entry, but it did go underneath equilibrium. Now, highs have been broken, so we are adjusting our fib low to high right here. Price came inside of the optimal trade entry, left a fair value gap right here. So we are taking the trade. Beginning of the fair value gap stops underneath the lows. Maybe let's just adjust it a bit on the 5 minutes. Then we're targeting a 1 over 2. like this. We did get a stop out in this case. It's no worries. Let's see if we are not breaking this low right here. We remain 1 hour bullish bias. We broke the low. So right now, what we did we just stepped it out. Okay, so this was news. This was most probably news, I would say. It's at 3:30, so that is the New York Stock Exchange open. We are just very bullish from there. We broke previous highs. So let's do low to high right here. Came to our optimal trade entry. Did not give us an entry. No fair value gaps, anything like that. Right here we broke the previous lows. So now we are switching our bias on the 15. 1 hour did not have any pullbacks yet. So this is what we are looking for it to come down to the 61.8. So let's see on the 5 minutes if we can find an entry downwards. We want to see it come here inside of this optimal trade entry. Okay, so as you can see, it took a while for us to hit that optimal trade entry. But right here it happened. We did leave a fair value gap. Very, very small, and it just got tapped right here. I think, but most probably wouldn't be in with spreads, to be completely honest. This is your stop loss, always above the previous highs. We're targeting a 1/2 like this, but since this was our like this, yeah, targeting a 1/2 like this. Our optimal trade entry on the 1 hour is all the way down there, so that's perfect. Now let's see where we are going. Damn, a lot of consolidation. So like I said in the equilibrium video, I would say close this. This is just not worth your time, I would say, and not worth the risk. But afterwards we do come to your take profit, but it takes you days. It doesn't take you days. It was just because I was monitoring on the 5 minutes. But it does take you like a complete full day to go to your take profit. Then we come on the 1 hour, and hopefully we get to that 61.8, and it works like a charm again. And the 61.8 right here. Go to a lower time frame, let's say the 15 or let's say even the 5, like we did before. So you have that reaction off there. You want to see a fair value gap happening in the market right here. So you have the fair value gap, you take your entry, you do your stops underneath previous low, you target a 1/2, and that's your trade, guys. So as you can see, this is a very good way to optimize your trades and to optimize your entries. And I mentioned in the beginning that I also use this to optimize my risk as well. So how do I actually do that? And guys, since this is a 1 hour, I would say, point of interest for us to look at, a 1 hour optimal trade entry. Like I said in the beginning, we're only using this in trending markets. So if this is an uptrend and if this is our correct zone that we are reacting to, what is the previous level that we can target, that we can expect price to take out? That is the previous swing high. In this case, for the 1 hour, it's this one right here. So let's see if that also happens. And as you can see, it gets smashed immediately. So basically I go to the lower time frames to work on my entry and to see the displacement happening. Then I want to see a fair value gap. I enter on the back foot of the fair value gap, but my target is still based on that higher time frame point of interest where we initially started the trade with. And that is, if we are on an uptrend, the previous swing high on the 1 hour. If we're on a downtrend, the previous swing low on the 1 hour. Guys, I hope you enjoyed this video, and I will see you in the next one. Bye bye, guys.